So picture this. It's early 2026, and the tech world just got hit by a financial earthquake. It was fast, it was vicious, and it sent a shockwave through the entire software industry that completely changed the rules of the game, pretty much overnight. The big question is, what on earth just happened? $1 trillion. I mean, just let that number sink in for a second. That's how much value, poof, vanished from software companies all over the world in just 2 days. A number so big, it's hard to even get your head around. Yeah, this wasn't some minor dip. This was a full-blown reckoning. So, of course, this begs a massive question. How could an entire industry, one that everyone thought was a sure bet for the future, just collapse like that, all at once? Well, we're about to play detective and follow the clues. Okay, before we get to the why, we really have to wrap our heads around the sheer scale of this damage. It all kicked off in Asia on February 3rd and just spread like an absolute wildfire, first to Europe, then the US, and trust me, nobody was safe. And the fallout? It was immediate. It was brutal. Major players like ServiceNow, a giant in workflow automation, took a massive hit, dropping over 6% in just 1 day. And it wasn't just them. The pain was everywhere, and it just kept getting worse. Salesforce, another titan of cloud software, got hammered too, dropping almost 6% as investors basically tripped over each other to get out. You see, this wasn't a one-off problem. This was systemic. And this wasn't just a Silicon Valley thing. It went global. I mean, look at Europe. Even the London Stock Exchange Group, a pillar of global finance, lost a staggering 12.8% of its value. The shockwave even hit the hardware guys, the ones making the chips that power everything. Chipmaker AMD got absolutely cratered, losing over 17%, its worst single day since 2017. And right there, that's a huge piece of the puzzle. This tells us the problem ran way deeper than just software. Okay, so what was the trigger? What set all this off? Well, this chaos wasn't random at all. It was actually sparked by 2 announcements that seemed separate at first, but together they pointed to one single, very powerful culprit. So here they are, the 2 smoking guns. Clue number 1, AMD comes out with a weak forecast. This basically hinted that all the focus on building chips for AI was starving the rest of the tech world. And then, clue number 2, the AI company Anthropic drops a bombshell. They launch a tool that can automate really complex jobs. Think reviewing legal contracts, which instantly put an entire category of software companies on the endangered list. And this is where the great irony of this whole story comes in. You see, artificial intelligence, the same tech that investors were betting the farm on, driving stocks to insane highs, suddenly looked like an existential threat. The market's darling had turned into its biggest nightmare. And that sudden, terrifying realization, it kicked off what the experts are now calling the Great Repricing. Suddenly, investors were scrambling, frantically sorting the entire software industry into 2 buckets. Companies that AI was about to eat for lunch, and companies that would actually profit from it. Right now, every single software company is being measured by this new, really brutal standard. It's not about how fast you can grow anymore. It's about a much more basic question. Can an AI do your entire job cheaper and faster? So let's break down those 2 camps. On one side, you've got the companies that are seriously at risk. Their software is all about automating simple, repeatable tasks. Reviewing documents, basic data analysis. Stuff that, frankly, AI is getting really, really good at. But then, on the other side, you have the companies that are positioned to win. These are the guys who own the deep infrastructure, the cloud services, the data centers, the cybersecurity, that AI literally cannot function without. They're selling the picks and shovels in this new AI gold rush. And the financial hit from this big repricing, it was instant. The average value of software companies, what we call the PE ratio, which is basically how much investors will pay for $1 of profit, it got cut almost in half. It went from a super high 51 times earnings all the way down to 27. The market was essentially screaming that the future of this sector was no longer a sure thing. So this new tech landscape has some really clear winners and losers. If you're making software for, say, legal or consulting firms, you're now seen as high risk. No surprise here, cloud and data centers, they're set to grow big time. But you know who the surprise winner is? Logistics and transport. Why? Well, because AI can make supply chains incredibly efficient. Some analysts are even predicting their profits could grow by almost 200%. Crazy, right? So, does this mean software is dead? No, not at all. But it is absolutely the end of an era. What we're seeing here is a massive reshuffling of the entire industry. It's a revolution, and AI is leading the charge. A lot of experts are comparing this to what the internet did to newspapers back in the 90s. Think about it. The internet didn't kill journalism, right? It just killed the old business model of printing on paper and delivering it. In the exact same way, AI isn't killing software. It's just killing the old way we build it, sell it, and use it. And here's the real heart of that shift. The old way was you'd pay a subscription for a software tool. You were paying for access to a program. But the new AI model, it's all about paying for a result. Customers don't care about the tool anymore. They just want the intelligent, automated outcome, and they will pay whoever's AI delivers that the best. And all of this really leaves us with one final, pretty provocative question for you to think about. Just look at the apps and programs on your own computer. How many of those expensive monthly subscriptions could be completely replaced by a single AI command? Because the trillion-dollar reshuffle we just talked about, it's really just getting started.